Hi there, Internet. My name is ʀᴇᴇᴜ and I'm one of eToro's most copied popular investors. Today, it is another Friday, and that means that it's time for my weekly update. Let's take a look at what's happened in the markets. All right, as usual, we start the review by looking at the returns of the portfolio. So for the year, we're looking at it around 11%. This month has seen a gain of 2% so far, 2.2% more or less. I've been exchanging blows with my benchmark, the S&P 500. The S&P 500 is on a tear at the moment, but I've managed to stay ahead of it. In terms of my stats for the various time periods, you can see them here. So if you'd invested $10,000 with me back when I'd first joined eToro, you would now have $75,000 right now. The S&P 500 has given a return of 9% year to date, so I'm only 2% ahead of it for now. As some of you will know, my aim is to beat the S&P 500 by an average of 20% per year, so I've got some work ahead of me. All right, that's enough about stats. Let's take a look at the markets. The S&P 500, the Dow Jones are at all-time highs. This always makes me a little nervous. Doesn't mean they can't go higher, but it does make me a touch nervous. The Nasdaq 100 is not yet at its previous all-time high, but it's getting pretty damn close. So the S&P 500 and the Nasdaq have been rallying off of the back of big tech. So the FAANGs predominantly putting in some good gains over the past week. I think the rise in S&P 500 has been still partly due to the rotation out of speculative tech. So this is the 1 week heat map. You can see that the FAANGs have done very, very well. A lot of tech has done well. More speculative tech hasn't done nearly as well. So, the kind of things that make up the ARK Innovation Fund. You can see some rotation into parts of value or defensive sectors, although there are some traditionally defensive sectors that haven't done as well. Energies, I'll touch on in a moment, but it hasn't done as well as the rest of the market. So slight rotation, but also people are moving into big tech because they still want growth, and big tech is obviously much safer than the speculative plays. On top of this, it seems as though the increase in US corporations tax is going to land. The specifics still have to be debated. It is not yet part of. It has not yet been approved by the US government. Thing to note is that this rise will be phased in over 15 years. So the market is really jittery at the moment because of this, but we're not seeing broad sell-offs because of the time frame involved in that tax hike. Trading volumes have been dropping off for the past while. So you can see the S&P 500 here rallying through this time frame, and this is the volume on the US exchanges at least. And you can see there was a big spike through January. So I think lots of retailers have been jumping in the market because they saw the fantastic gains, but then the shakeout that we've seen, the consolidation that we've seen through half of Feb and all of March, I think has made people a little bit less confident that they're going to see spectacular gains as happened through last year. By the way, making money isn't as easy as it was through last year, although there still are many opportunities in the market. All right, so the Fed has been doing a lot of talking this week. It seems as though not much is going to change. So the Fed will continue its QE and maintaining low rates in order to get the US economy firing on all cylinders. They also did mention that there's some reliance on the world being vaccinated in order to have sustainable strength in their economy. AstraZeneca continues to be in the headlines, and so now this is because of the blood clots that are seen in some very rare instances. Some countries have imposed age limits for those using the Astra vaccine. The UK has done similar, I think it was this week. and so those under 30 will not be taking the AstraZeneca vaccine, although we have access to a few different types of vaccines in the UK. As was to be expected, so the European rollout of the vaccines hasn't been great, and now many parts of Europe are entering third stages of lockdowns or strengthening of the current lockdowns, and this is affecting the industrial sector within Europe. This is bad for all kinds of reasons. It hurts the people, it hurts the businesses, it hurts the country's economies, but I don't expect this to persist for more than 1 to 2 quarters. The US dollar was rallying a little through the early part of this year after tumbling through much of last year. The US dollar, the price of the US dollar affects all kinds of things. It was increasing, but has, since the risk on attitude increased, since people decided to buy more equities and the scare of the sell-off faded into the background, the dollar has dropped off a bit. The US dollar, by the way, is seen as a bit of a safe haven. So when things are volatile, people rush to the dollar, and that means the price increases. So now they're leaving the dollar because they feel a little bit more safe, and this means the price drops off. This has all kinds of consequences. For example, lots of things are priced in dollars: oil, gold, all of the US stocks, of course, which makes them cheaper relative to other currencies, and so we are likely to see investor inflows. It does suck a little bit for me because I am paid in dollars and I live in the UK, so the exchange rate is not working in my favor right now. Okay, oil prices have been very volatile. So there was this huge run through last year from the incredible lows that we saw through 2020, and now we've seen the prices drop off and they've been in consolidation mode. The swings have been quite big for oil. It's uncharacteristic of oil to swing so much, but there have been all kinds of news items that have impacted the price of oil, and this in turn has affected the wider energy market, including solar and green energy companies. I'm not 100% sure why there is this relationship, because oil and green energy, they are collaborative, but also they are competitors in some ways. But I think people take the drop in price of oil as a signal that there's less demand for energy overall. And also cheaper oil might mean that other forms of energy are less attractive. So what we've seen through the past 1 week, these are stocks, well, mostly stocks in my portfolio. You can see that the biggest losers for the week have been our solar stocks, which is fine, because this is irrational behavior. We know that there are some huge stimulus bills and other kinds of infrastructure bills going on around the world, and green stocks will be fine for the next 10 years. They will be the major winners. So when the market's irrational, that's good for us. Okie dokie. So trading in Chinese stocks. So if I jump back to here, the CQQQ is an ETF that contains, it represents some of the largest technology companies in China. And this is one of the few healthy charts that I'm seeing at the moment. So these run-ups are looking a little unhealthy, whereas you can see here that we've got from top to bottom, I guess that's a 20% sell-off. So this index, this ETF is in a bear market. So it seems to have found a bottom. Things are looking a little bit frothy over here, which is typical. You don't go straight from a bear market into the next bull market. You expect some froth. It usually takes, for a bear market, it takes weeks and usually months for the recovery to come. So we could see some frothiness in Chinese tech for a while. There are some things that I am a little concerned about. It is not the delisting of Chinese companies from US indexes. I know the markets or the media actually are making those things into big news items. I don't see that as a real danger at the moment. I think the US is asking Chinese companies to do a reasonable thing, and I think they will do the reasonable thing, which is audit their accounts to whatever standards the US imposes on them. The concerns that I have are not that one. Is the clampdown on debt. So Beijing has been tightening up on all kinds of risky debt through this year, and this is part of the reason that we've seen Chinese stocks fall through not all of Q1, but a large part of Q1. And this is healthy. This is great for a maturing economy, and it means that the next leg of growth will be a lot more sustainable. It'll get rid of all of the bubble fears in that market. But it seems as though China's now doubling down on this and clamping down more and more on debt, just to make sure that their market is healthy. Fantastic. But it means that for now, growth in the Chinese market will be hampered. And I'm not going to go through this whole article, but it looks as though China's going to be tightening up debts through the rest of this year. They've seen pretty good growth through 2020, despite the global pandemic. They're targeting 6% GDP growth through this year. And part of what they're doing now is to make sure that next year's growth is healthy. So although I still have huge faith in the Chinese market, I think I might trim some of my positions, because I think through the next 3 quarters, China or parts of the Chinese market might underperform other geographies. Okay, and we are going to see Coinbase IPO. So I don't know how many of you have looked through the numbers, but they are incredible. This is a company that has grown so fast and has just got so much profit. They're so incredibly profitable. The risk here is that their fortunes are tied almost completely to how the crypto market is doing, and it's done very well through the past year, and that's why they've done well. But I think that as time goes on, we can be more and more certain that cryptos are here to stay. So they might not have as good quarters every quarter, but I think that they will continue to do well. They're obviously a very well-run business. Cryptos, touching on that just for a moment, we saw a bit of a pullback this week, but the markets have bounced back quite nicely. All right, so what is up for next week? So when Coinbase does IPO, there's a chance it will affect cryptos. I suspect that the effect will be positive. So I wouldn't be super surprised if we saw Bitcoin hitting new all-time highs through next week. But it's cryptos, so we will see. And then finally, earnings will be a focus through next week. So I don't have all of the big banks in my portfolio, but the big banks, the US big banks, will start reporting. I think that we might be in for some positive surprises for some of the banks, for a few reasons that I won't dig into right now. I think I put up a post about JP Morgan and etoro a while back, and if you read that post, you'll see why I'm fairly bullish on US banks for the next quarter, maybe 2 quarters. And then beyond that, the week beyond that, we will start seeing technology reporting earnings. All right, so that's it for this Friday. Thank you very much for your attention. I hope you have a fantastic trading day, and I'll talk to you next week. Goodbye.